Our stock in focus today is tissue and paper-based personal care products maker NTPM. RHB Research is keeping its buy call on the counter but lowering its target price from 92 cent to 80 cent. The stock last closed at 52.5 cent. Here's what RHB Research had to say about NTPM's FY21 results. Earnings at a record high of some 64 million ringgit, accounting for 116% of its full-year forecast. But it deems the results as within expectations, as the numbers were aided by a tax adjustment that lowered the effective tax rate to 8.8% in FY21. Looking ahead, RHB says NTPM's near-term earnings outlook is challenging, with the first half of FY22's numbers affected by the lockdown. Beyond that, however, the research house expects demand from away-from-home channels and production output to normalise, following a broad economic reopening in the second half of FY22. Meanwhile, it has implemented a price increase to pass on the higher raw material costs, and demand for tissue paper products remains resilient. Its Vietnam operations have also edged closer to the break-even point, and its performance is expected to improve further in FY22. RHB says after paring down borrowings by 83 million ringgit, NTPM's net gearing has moderated to 0.59 times in FY21 from 0.85 times in FY20. Together with the debt restructuring, RHB believes the company is in a good position to regain its Sharia-compliant status in the next Securities Commission review this November. The research house cut its FY22 earnings forecast by 14% and lowered its target price to 80 cent, implying 18 times PE FY22 in line with the sector average. RHB Research is the only one to cover NTPM recently, so that's one buy and an 80 cent target price. NTPM last closed at 52.5 cents, so that's a 52% potential upside.